ranking the most popular monthly dividend ETFs. Welcome back to the channel, guys. I talk about dividends, investing, money, and all of the above. So if you're interested, hit subscribe. Today we are going over all of these monthly dividend ETFs you see below. I'm talking about how I would rank them. So I'm not a professional investor. I'm just a retail investor. I've been doing this for many years now, and I'm very, very pumped to making this video. And I found some of these ETFs I didn't even know about, and definitely some to look at. So I'm going to rank them S tier being the best, F tier being the worst, and ABC being in the middle, of course. So let's go ahead and jump straight into it. I'm not going to dive too far into these stocks. We'll talk about their dividend yield and how they performed over the last 5 years, and then put them into the ranking. So let's go ahead and start strong with ticker SPYI. A really popular fund, has a 12% dividend yield. So if we go ahead and check out the 5-year chart on here, it's only been around for a little over a year and a half. So it is down 0.39%. Nothing too crazy. We can't really rank this one too easily on their dividend history because they have been performing for the last year and a half, but it's not a lot of dividend history, which immediately knocks this one down. The 12% dividend yield is pretty insane. And so NEOS S&P 500 high income ETF. NEOS is growing in popularity. They have, I think, 3 funds now, 3 different ETFs, 2 of which are on this list. It does pay monthly, like this list is about. So when I look at this one, this is a tough one for me because it is very risky. It has a high dividend yield, but it has been paying out consistently, and the price return has been average. It's not going down, it's not going up, but you're still yielding 12%. So just based off that, it is risky. I'm tied between A and B tier. I'm going to go with A, which is really crazy because this is extremely high risk, but I am a high risk investor. I'm a bit on the younger side compared to most investors, and so I like having higher risk, higher reward types of investments. So next we are looking at ticker DGRW. Now this is one I hadn't really heard of, and it's really, really interesting because it has performed well over the last 5 years, but the dividend yield is pretty atrocious at 1.7%, but their 5-year return is over 65%. So it is quality dividend growth fund, which I think is great, but you're not going to get a lot of the monthly income from this unless you grow a huge amount in it. So it's more so growth like we've seen, but it does have some dividends as well. And so for this one, it seems like a very safe bet. If we go to the max chart, it's beautiful. I wonder how this one would stack up to like SPYI. I'm curious. So this one, I am going to actually put this in A tier as well. It is a very reliable fund with a lower dividend, and that's why it's going in A tier. It's not S because the dividend yield is a little bit too low for me. So next we are talking about DIVO, the Amplify CWP Enhanced Dividend Income ETF. So DIVO is really, really interesting. This is one, the dividend yield is 4.6%, and the 5-year gain is 28%. So it kind of knocks it out of the park with both. I love stocks that have these dividend yields. I mean, 4.5% is pretty phenomenal, and then you're also getting 28% on the 5-year return, and their max return dating back to 2016, so only 8 years so far, is still 52.6%. So DIVO, people love this one. It's extremely popular. And for that reason, this one's going to be our first S tier because it has been performing very consistently, and I think it will continue to do so. And as long as you have the growth plus the dividends, that's all you can really ask for with one of these. So I'm pumped for DIVO. That's one that I have heard of, but I haven't really looked into, and I will be adding a position on that one. I may do a 5-minute DD video on it. Check it out some more if you're interested. Again, hit the like button, hit the subscribe button. Next, JEPI. Probably the second most popular ETF, I would say, maybe third most. 5-year return of 11.64% for JEPI. Dividend yield of 8.5%. I struggle with these ones. JEPI has done pretty well. It hasn't been around for that long, so 4 years, under 4 years. But it's been performing well. Like you see, we're up 11.6%. Like I said, the dividend 8.5%. This is a tough one because it gets knocked down a category. We don't even have 5 full years of dividend history, but this one is also going in A tier. Also going in A tier. People may want that one in S tier, and I wouldn't be surprised to hear that, but I'm going to put it just because of the history. And now another popular JP Morgan fund, we have JEPQ. Has been around less than 2 years. And let's see how we've performed. The dividend yield, 10.0 or 10.80%, almost an 11% dividend yield, and a 5-year gain of 4.27%. This might be getting kind of boring. I'm conflicted because it only has 2 years of dividend history. So if I put this one in B tier for not enough dividend history, then SPYI should also go in B tier. But they've both been performing extremely, extremely well. So 5-year charts up. I'm putting them both in A tier. You guys can disagree. Let me know in the comments what you think. That is a tough one. Those two are very similar funds. I like them both. I own SPYI. I don't own JEPQ except for our $1,000 dividend account, where I post videos about it every month if you guys are interested in that. But I'm looking in, maybe I'll purchase some JEPQ because it's been doing well. But the problem is if you look at JEPQ compared to JEPI, JEPI was performing that well and then kind of fell off. So will the same thing happen with JEPQ? I don't know. Next is NUSI, the Nationwide NASDAQ 100 Risk Managed Income ETF. This is one I looked at really, really closely because it was absolutely destroying. It was up. This is not, I can't tell how far up it is. Bummer. No, I can. It was up 16%, and it's got a 7.5% dividend yield, but the 5-year, it's down 9.7%. And from the highs, down 22%. Now, the reason that this one gets more of a negative view from me is because it's supposed to be risk managed. You're not supposed to see a drop of 37% from almost $30 to under 20. You're not supposed to lose a third of your money in the span of a year with these funds. So for that, NUSI is going to go B tier. It's got a good yield of that 7.5%. And since that drop, it's been growing. It's up 22%. But still, if you're looking for a risk-managed income ETF, you want it to be risk-managed. Just my opinion. Let me know what you guys think. What's our next one? QYLD. This one, I'm going to get hate for. So, QYLD, 5 years, it's down 25%. You're yielding, let me check my data sheet, 12.14%. So, I mean, you're still looking at a 30+% return, even with the price going down. But my problem with these is I don't want my investment to be losing 25% every 5 years. I really don't. Even if it is yield, I mean, 31% max. It's been trading since 2013. But the problem with these covered call ETFs, a lot of them is I don't like it when they just continue to trail down, because then you're getting all these dividends. But if I can't reinvest, my goal as a dividend investor, and again, I'm higher risk, my goal as a dividend investor is to reinvest these dividends, whether it be into other dividend stocks or into that very same stock or ETF. So I don't want to be just funneling all this money, put $100 into QYLD, pull out 75 years later with some decent dividends. It's just a lot of work. And I think that there are different options that could be better. And so for that, honestly, I'm thinking C tier, maybe B. I mean, you're yielding 12%. You're still positive. I'm going to go B tier. I don't like QYLD, and I'll be honest about that. I'm biased. I did own it, and that's why I don't like it. I held it for a few years, and then it ended up being down like 19%. But the problem is that I was reinvesting my dividends, which maybe is the stupid thing to do with these funds. You're not supposed to reinvest your dividends. But I was, because again, like I said, that's what I'm trying to do to build my portfolio. And so I was down by like 19%, and then still my break even, I was still negative by the time I sold it, even with the dividends reinvested. So wasn't pumped about that. Maybe I'm a little bit biased, but next stock, next ETF, QQQI, very, very new stock. absolutely been destroying it lately. I have full videos out on this one, SPYI. I'll link some of those down below. And at the end of the video, if you guys are interested in watching really interesting funds by NEOS, no 5-year history, not even a 1-year history, down 2.6%. QQQI yields 14.1%. Has an insane dividend yield. You get some crazy monthly dividends from this one, but there's just not enough dividend history. We have less than a year. And the thing that I think with QQQI is I tie it to SPYI, which has been performing pretty well over a year and a half, but there's still just not enough history there. Even with the high dividend, it's going to go B tier, which is meh. Run of the pack. Maybe I own it, maybe I don't. I do have some QQQI because I think there is some potential, not financial advice, but I think it does have potential like SPYI, but it just depends on how the market does and how things go as well. Next on our list, RYLD. So these covered call ETFs, this one's on the Russell 2000, and this one is probably the worst out of all the YLD funds. On the 5-year chart, it's down 36%. The dividend yield is 12.6%, but it just continues to drop. Like maybe, yeah, you had a little bit of a run up of, not a little bit, you ran 61%, but have since then dropped 36%. So I don't want to actively manage my portfolio. Now I am investing in a Roth IRA, so I get tax benefits to it. And I really don't want to have to be selling and holding, like this is my retirement account that I'm putting my money into. I don't want to look into my retirement account and see that I'm down 36% on a fund. I really don't. And it's a mental thing. It's what I like seeing. It's why I adjust my portfolio and make changes. And maybe in the future, I'll look into this and I'll like it more. But I just don't right now. And to be honest, we've been in a good market these last 6 months. Like even NUSI was up quite a bit. A lot of these funds have been up. So why is the Russell 2000 not up? Why is it not performing? So again, this is going to be the first one that goes into C tier for me. You still have that 12% yield, but I just don't see it worth owning. I don't know. I know there's a crazy following with QYLD. I don't know if there's the same following with RYLD. Only time will tell. Let me know. Our next fund is SDIV, the Global X Super Dividend ETF. I don't know if I have ETF in lower or TF in lowercase. That's weird. So SDIV, another 12% dividend yield, and even worse, 60.5% down on the 5-year, 71% all time. I would never buy this. This looks like one of the absolute worst things you could buy. It's an immediate F tier. I looked at this and I was shocked that this popped up on articles on the best monthly dividend stocks to buy. Don't like it. Let me know if I'm wrong or if there's something hidden about this one, but I'm not owning something that's down 71%. I mean, since 2011, it's been a long time. We've had some crazy markets since then. It looks like RYLD's chart too, which is interesting. SPHD, the Invesco S&P 500 High Dividend Low Volatility ETF. It is a mouthful. A really, really interesting fund. Has a lower yield of 4.4%. Not terrible. 5-year returns is just under 2%. 1.6%. So it's not one of the growth ETFs, but you get a nice 4% dividend yield. And the interesting thing with this is if we look at the max chart, it is up 70% since 2012. So in 12 years, you're up 70%, plus you're yielding that 4%. So I think this one has some potential. I'm definitely going to look into it further, and I'm curious to see what I'll find about it. It is really not as popular as I thought a fund like this would be. It reminds me a lot of SCHD, except it pays monthly dividends. SCHD is a quarterly paying dividend ETF, but it has a 3.5% dividend yield, maybe a little bit higher now. It's been beaten down a little bit, but this reminds me of that, but pays monthly. So one to look at. I may do a video on this one as well. Let me know if you guys want me to do any individual videos on these. And so SPHD, 4% dividend yield, long-term up pretty good. That's going to go in A tier. And lastly, we have XYLD. So the last of the YLDs, on the 1 year, it's down 1.69%. Pretty crazy drop-off. Not too bad. 2.5% recently. XYLD has a 9.65% dividend yield and a 5-year return of down 18.71%. These funds could be so amazing, but they just don't return their capital. I just don't understand. And so this one's not as bad all time, down 2% all time. It's been up, it's been down. Now we're in a bit of a down point, but I don't really know. Maybe someone knows. Let me know in the comments. How is the market affecting this? I know this is the pandemic, and then we had the pandemic run, and then we fell off after there, but why is it still not trending upward now? We've seen over the last year a pretty good return in most stocks in the market, or a good amount of stocks, especially bigger, larger cap ones. So why are these funds still dropping? It says over the S&P 500. The S&P 500 is doing insanely well. I know because I have a share of SPYI that I bought at like $300. It's like 5 something now. So I know SPYI is doing well. So why is this fund not? So this one is going to go into C tier with RYLD. And that is our final ETF. Maybe I'll do another monthly dividend stock. I'll do some monthly dividend payers instead of ETFs. Let me know if you guys like this kind of video and if you want any more breakdowns into these different funds. I'm genuinely curious to see what everyone thinks and what funds people like. This is my list. It's not financial advice, but I hope you enjoyed this video. Again, let me know in the comments and I'll see you guys in the next one.